Welcome to Yahoo Finance Sports Report, a unique look at the business of sports, brought to you by Yahoo Finance and Yahoo Sports. I'm your host, Joe Pompliano, and I'm here to coach you through the financial game. We'll look beyond the headlines, analyze all the latest sports news, the teams, trades, and billion-dollar deals, so you and your portfolio will win big. This week, we're discussing a potential future lockout in Major League Baseball, Formula One's 2024 earnings, Caitlin Clark getting the United Center treatment for the Indiana Fever's 2025 games against the Chicago Sky, and so much more. I'll also be joined by former Nike executive Michael W. Smith, owner of the Northern Ireland Football League Premiership team, Carrick Rangers F.C, to discuss the global growth of small market soccer teams and a unique investment opportunity for soccer fans in the Carrick Rangers. Let's huddle up and get right into it. All right, it's time for this week's Pomps Playbook, where I take a look at some of the biggest headlines in sports that you and your portfolio need to know. First, I want to discuss some choice words recently shared by Warner Bros. Discovery CEO David Zaslav in regards to the company's sports media rights portfolio. On last week's earnings call, Zaslav said, quote, "We don't need any more sports anywhere in the world in order to support our business," end quote. Zaslav also told investors that WBD will instead prioritize IP from signature film and TV properties that the company can own instead of sports rights that it has to rent and renew at higher rates. Now, this isn't necessarily a shock considering that WBD is losing its rights to the NBA after this season, which will result in millions of lost advertising revenue, but will also lower the company's overall expenses. Zaslav even told investors last week that Warner Bros. Will be money good once its NBA deal expires, which costs the company $1.2 billion annually. And it's not like Warner Bros. Is completely out on sports. It still owns the rights to the NHL, the Tennis French Open, NASCAR, the Unrivaled 3v3 Women's Basketball League, and All Elite Wrestling. Warner Bros. Also has sub-licensing agreements with ESPN to air select college football playoff games on TNT. But in a market where broadcasters and streamers are battling each other for every available sports media rights package, Zaslav's remarks made it clear that sports will not be a priority for Warner Bros. Moving forward. And with a loss of $11.3 billion in 2024, it's clear that Warner Bros. Discovery is focused on paying down debt, reaching profitability, and offering just enough sports content to stay relevant. Next up, we're looking at a bold prediction from the Major League Baseball Players Association. Last week, MLBPA Executive Director Tony Clark told reporters that the union is gearing up for a work stoppage during its upcoming collective bargaining negotiations for 2026 and beyond. Clark noted that his opinion was based on statements from MLB Commissioner Rob Manfred, who told The Athletic in January that, quote, "The great thing about offseason lockouts is the leverage that exists gets applied between the bargaining parties," end quote. While Manfred may have been brutally honest with The Athletic, he's also not wrong. MLB would rather have an off-season lockout than an in-season strike. Player strikes in the 1981 and 1994-95 seasons crumbled the league, and a strike can result in hundreds of millions in lost revenue from canceled games. MLB last had a lockout in 2021 that delayed the 2022 season by 1 week, but the 162-game season was ultimately saved. Tony Clark said that negotiations for the 2026 CBA will likely start this coming spring, and if a new CBA isn't signed by December 1st, then MLB will surely enter a lockout. The biggest issue for the 2026 negotiation will be the institution of a hard salary cap, which many bottom-tier team owners may want as clubs like the Dodgers and Mets spend big under MLB's luxury tax system. However, the MLBPA has made it clear that a hard salary cap won't be an option. So I'll be keeping an eye on these negotiations, and we'll see if the league and union can find a solution that appeases both players and owners. To finish out Pomp's Playbook today, I'm talking about Formula One's 2024 earnings. It was another banner year for Liberty Media-owned Formula One. F1 generated $3.65 billion in revenue for 2024, a 14% increase from the $3.2 billion they did in 2023. Liberty Media said that around 33% of F1's revenue was from media rights, 29% came from race promotion, and about 19% resulted from sponsorships. Formula One also drew 6.5 million fans to race events in 2024, a 9% year-over-year jump that resulted from an increased calendar of 24 races. And the earnings report also noted that global TV viewership for F1 climbed from 1.5 billion viewers in 2023 to 1.6 in 2024, for an average of 66 million viewers per race on linear platforms. Rising viewership will surely be brought to the negotiation table by F1 as it seeks a new deal for its U.S. media rights starting in 2026. According to Sports Business Journal, F1 is looking for $160 million to $180 million per year for its new U.S. media rights deal, up from the $90 million it currently receives from ESPN each year. And while U.S. viewership stayed flat for F1 on ESPN in 2024 with 1.1 million average viewers, the motorsport series still has potential to grow with Liberty Media's continued investment in American fans. F1 is reportedly in talks with NBC and has been linked to Netflix and Apple for its next media rights deal too. But no matter who is F1's next American media rights partner, the racing competition could be in line for another revenue boost come 2026. This week for the Deeper Dive, where I give you a play-by-play analysis of news in the sports world and its significance to your bottom line. We're talking about ESPN Bet's struggle to gain market share in the U.S. sports betting industry. Last week, Penn Entertainment reported its Q4 2024 and full-year earnings, and the results weren't great for ESPN Bet. Penn's interactive division, which includes ESPN Bet, lost nearly $110 million in the fourth quarter alone. ESPN Bet's market share outlook was also dismal. Penn said that ESPN Bet only controls 2.35% of the sports betting market and is projecting that ESPN Bet will have a market share of 4.7% by the end of 2025, a far cry from Penn's initial goal to have 20% of the U.S. sports betting market by 2027. The numbers show that Penn's $2 billion licensing deal with ESPN for ESPN Bet isn't working. And the deal looks even worse considering that Penn bought Barstool Sports for $551 million in 2023, only to sell it back to founder Dave Portnoy for just $1 at an $850 million loss so it could do the ESPN deal. Penn thought it could leverage ESPN's audience, which is obviously much bigger than Barstool's, to reduce customer acquisition costs and turn ESPN Bet into a real sports betting competitor. However, it took Penn 3 years to integrate its sportsbook into ESPN's general app, and less than 0.1% of ESPN's app users have downloaded ESPN Bet so far. ESPN Bet is also failing to take advantage of parlay bets, which have roughly 3 to 4 times the hold of a straight bet. Parlays also lead to better long-term margins and higher customer lifetime values, but only 30% of bets on ESPN Bet are parlays, compared to 50% industry standard used by DraftKings and FanDuel. As a result, Penn stock is now down 84% from its 2021 high of $130 per share, and its market cap has fallen off a cliff from $20 billion in 2021 to just $3.3 billion today. Plus, ESPN Bet's 2.35% market share pales in comparison to FanDuel and DraftKings, which own about 70% of the market in the U.S. today. Now, Penn isn't the only one to blame for ESPN Bet's struggles. ESPN has been slow to incorporate ESPN Bet odds across its portfolio of content, and the brand doesn't aggressively promote the sportsbook either. But that doesn't really matter to ESPN. The sports media giant gets paid $150 million a year from Penn, and still holds a 4% equity stake in DraftKings that it acquired in its 2017 deal for 21st Century Fox, which is now worth about $850 million today. And if things weren't already bad enough, Penn has also hinted on its earnings call that ESPN Bet could soon be done. The company's licensing agreement with ESPN has an opt-out clause in 2026, and Penn CEO Jay Snowden said last week that the opt-out could be triggered if not enough progress is made in 3 years. There's no denying that this has become a horrible deal for Penn. The company's $2 billion strategy of using ESPN's content machine to reduce customer acquisition costs is failing. And if ESPN Bet shuts down after 3 years, Penn will have wasted more than $1 billion in 5 years of time to acquire just a tiny fraction of the sports betting market. At the end of the day, it isn't crazy to say that this deal is one of the worst uses of shareholder capital in history. We've made it to the one-on-one, a conversation where I get to break down news and sports with a key player in the industry. This week, I'm joined by Carrick Rangers F.C. owner Michael W. Smith. Michael, thank you so much for joining the show. I think the most logical place to start is just why you bought this football club in Ireland.
Yeah. Well, Joe, it's good. It's great to be on and great to see you. Owning a football club is something that I have wanted to do for probably 2 decades. And really about 2.5 years ago, I got serious about that. Wanted to find a club that was in the top flight so that they have possibility and a path to Champions League and to Europa Conference League. And I wanted a club that was profitable. I didn't want to just bleed money. The old saying is the fastest way to become a millionaire is to start as a billionaire and buy a football club. And I didn't want to do that. And so I started my search and led me to the Irish League to begin with, which I believe is one of the most undervalued sports properties out there. And looked at a number of clubs and landed on Carrick Rangers because of their commitment to the community, their success, and really shared ambitions to grow the club.
Yeah, Michael, one of the things that I'm particularly interested in is that the club has been profitable for 10 consecutive years at this point. As many people know, most European soccer clubs, only around 5% are profitable on an annual basis. How has your club been able to do that for 10 consecutive years now?
Yeah, well, I have to give tremendous credit to our chairman, who remains a significant shareholder in the club. Uh, he's been in that position for most of those 10 years. And it's really been about just living within our means, making sure that we stay disciplined on budget. The club during that 10 years has seen uh, relegation and promotion. And you have to make sure that you're putting away for rainy days so that when you do get relegated, that you have the funds to be able to sustain, continue your payroll, and continue to invest so that you can grow the club. But it's really just been good, solid financial discipline and not getting caught up in the passion of you know kind of a 1 year of glory or signing that one big player. But really, really taking a really disciplined look at the budget each and every year.
One of the interesting things that you guys have decided to do as a club, which we really haven't seen all that much, is that you've decided to raise outside capital from other shareholders, putting this process up on WeFunder. Can you just explain a little bit about why you decided to do that?
Yeah, there's a couple of things at play. At the league level, the league just adopted a new set of financial rules that require clubs to be break even at least over a 2-year period, and that is a return to some rules that the league had pre-COVID. So that will drive some control over salaries. For clubs to be able to maintain that. For us, we are creating, we have an academy today, but we're looking to move to a full-time elite academy that will feed players into our program, but also generate income from selling players uh, to clubs across the water, into bigger leagues across Europe.
Yeah, and one of the interesting things that you've done since becoming owner of the club, that a lot of other clubs aren't really doing at this point. There's certainly been a handful of others that I've seen, but not nearly as many as you might expect given the success of some of these projects, is fundraising, right? You guys have a page on WeFunder. You've raised hundreds of thousands of dollars from hundreds of investors at this point. What led you to do that rather than just maintaining all the equity in the team yourself?
Well, it's I am going to maintain majority control. I but for me, it's as much about building a new fan base and a bigger fan base. I mean, we play in a relatively small country, in a relatively small town of Carrick, beautiful part of the world, amazing people, but there is a limit to how much we can grow within that group. And so for me, the capital raise and is important. We're going to leverage that money to build this full-time elite academy, to invest in our women's team, continue to invest in the men's team. But it really is about building a bigger and broader fan base, and really establishing ourselves as a global brand.
We've got to take a quick break, but we'll be right back with more of my conversation with Michael W. Smith right after this. Welcome back to Yahoo Finance Sports Report. I'm your host, Joe Pompliano. I'm here with Carrick Rangers F.C. owner Michael W. Smith. And what do you think about real estate? Obviously, you guys have a stadium today, but it sounds like there may be a possibility to build a new stadium at some point in the future. Is that part of your plans?
It is. We are on a long-term lease for the ground that we sit on. We've been making investments in our facilities. We just recently replaced lights and artificial turf on our practice field, on our training grounds. Been a number of other improvements across, but we do have a master plan that involves 2 new stands and some new covered standing areas. significant number of new training facilities and physio facilities. We are looking to start progress on that this summer.
And what is your opinion on the growth of women's football? Obviously, the men's club is obviously the premier asset at this point, but it feels like women's football, specifically here in the United States with the NWSL and some other big clubs across the world, whether it's Barcelona or Chelsea or other teams like that, have really become more popular, now drawing very similar crowds in some instances to the men's team. Is that something that you're focused on building out?
It is. It is. We launched our women's program last year. We started off with two senior teams. The first team playing in Division III, and the reserves playing in Division VI. Both of those teams were promoted, and we'll play a division higher. We'll play in the second division with our first team this year. We're in preseason at the moment. It is part of our 5-year plan to see the women in the premiership and competing for spots in European competition. It is, it's a huge growth area, and it's also a part of our commitment to the community. We're launching our women's academy this year with the first couple of age groups, and really provide the opportunity where we want to be is in a couple of years to provide the opportunity for any girls or that want to pursue a career in or just pursue the sport of soccer or football to really have a pathway all the way from U9 all the way to professional. That's what we're aiming for.
When we start to look at the financials of the club specifically, I'd love to just get some insight into how you guys think about revenue growth, both today, but also into the future, right? If you think about most professional sports leagues, the major leagues here in the United States, most people think media rights with a smaller amount of money coming from ticket sales and sponsorships and merchandise and things like that. How does the revenue stream for the club look today? And how do you think that will evolve over time or maybe change over the next 5 or 10 years?
Yeah. It's that there when I believe that the academy is has the most potential for our revenue stream. The fact that you can develop players, sell them in transfer fees, you and then in the model under FIFA, you actually can have sell-on fees. So it's not just the first transfer, but it's potentially the second transfer and beyond. And so that really is our highest potential revenue stream with the highest ceiling. Obviously, ticket sales. We want more people in the gates and the grounds. But I also believe this capital raise, creating an international fan base, not only is that going to be more merch sales and potentially lead us to a point where we can take our media rights deal higher, it also will drive greater sponsorship. So we'll really be able to go after global brands for sponsorship, which is fairly limited in our league at the moment.
Yeah, and obviously being able to say that you're a co-owner of a club that was founded in 1939 is cool and interesting. But what is the value proposition for investors?
It's that clearly the passion of owning a professional team, and that's a big part of what I'm trying to bring to everyone that invests. Is I really want them to share in this ownership experience and really find the joy that I've found. As this has really exceeded my expectations over the last 18 months of just how much joy I get from it. Obviously we offer perks. Everybody that invests has something tangible that they can take away from it. And then we have structured our raise and the shares that we're offering where a dividend is possible. Now, obviously, we have to hit certain financial thresholds before we can do that. A big part of our vision for the next few years is to continue to reinvest profits into the club, grow the club, build the infrastructure, drive our level of professionalism and competitiveness across the women, across the men, across the academy. But as we start to realize some of the revenue from player transfers and other income streams, we are structured in a way that we can offer a dividend.
Very interesting. This was a fascinating conversation. If anyone wants to learn more, you can check out their WeFunder page. Michael, thank you so much for joining us.
Thank you very much.
The clock is winding down here, but we have just enough time for some final buzz. So I want to talk about the Chicago Sky moving Caitlin Clark's games to the United Center. If you struggled to get a ticket to last year's Indiana Fever games against the Chicago Sky in the Windy City, your odds to grab a seat in 2025 have just gone up. Last week, the Chicago Sky announced that their 2 home games versus the Indiana Fever will be moved from the Wintrust Arena to the United Center this summer. This means there will be over 10,000 more tickets available for this year's Fever games in Chicago, as Wintrust Arena only holds around 10,400 fans, compared to the United Center's 20,000 plus seats. The games will also be a first for the Sky, who have never played at the United Center in their 20-year history. The move is a no-brainer for the Chicago Sky. The Washington Mystics, Atlanta Dream, and Las Vegas Aces all moved their Indiana Fever games to bigger arenas last year and enjoyed the spoils of increased ticket revenue from Caitlin Clark fans. Plus, Fever versus Sky games are the hottest ticket in the WNBA right now, giving Clark's rivalry with Sky forward and fellow superstar Angel Reese. And the rivals could be set for a new record for the most attended WNBA game in history, which was set by Caitlin Clark last year at 20,711 fans for her game against the Washington Mystics at Capital One Arena. Tickets for the 2 games go on sale March 11th, so be sure to set a reminder if you want to get a seat. Prices for Clark's away games were 35% to 85% more expensive than normal prices in 2024, according to Vivid Seats. We're all out of time, so it's officially game over for this week. Thank you so much to Michael and for all of you for joining us. Make sure to tune into Yahoo Finance Sports Report on Thursday at 5 p.m. wherever you get your podcast. I'm your host, Joe Pompliano. See you next time.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.